Hello, everyone. Welcome back to another episode of our weekend series dedicated to price action based technical analysis. Today, we will be taking a closer look at the GBPUSD market structure and how price action is currently performing at the crucial 1.2600 zone, continuing its recovery post the mixed US PMI data on Friday. In our previous trading setup, remember that we capitalized on the bullish momentum, securing over 400 pips from multiple buy entries, driving the market up to the crucial 1.2600 zone. If in any way you missed out on these commentaries and want to catch up for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. As we approach the upcoming week marked by significant Bank of England representative speeches and key economic features from the United States, how do we plan to navigate the anticipation of these events? Well, stay tuned in as we unravel the potential trajectory of price action for the upcoming week, employing fundamental tools such as trend lines, key levels, and chart patterns. Before we proceed, it's important to stress that this video is for educational purposes only and should not be considered financial advice. My aim is to provide insight into the GBPUSD chart, enhancing your understanding of price action analysis. Remember, Forex trading carries inherent risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. So with the groundwork laid and with no further ado, let's dive right into the business. As usual, we will be looking at the daily time frame. What I did was to take into consideration the nature of price action since the month of April. That's like 6, 7, 8 months of historical data to decide what my next line of action would be. And in fact, I was able to identify a key level at the 1.2600 area, which will be serving as my yardstick for trading activities for this week. And in fact, if you look at how price action had played around this area since the month of April, you will see how it had played a major role in determining the direction of price action. Now look at what happened here in the month of May. We saw how this level was serving as a selling niche at some point before we saw price break out of the structure in the month of June. Now look at what happened here. We saw another buy pressure resume around this area, buy pressure resume again around the structure, and the same thing also happened during the mid-month of August before we finally saw price break down that structure in the month of September. And since then, price action has been trading below this level, which further emphasized the strength of the sellers. However, something interesting happened during the end of last week's trading session, and despite the strong impulsive bullish move, we saw how price action closed as exactly the 1.2600 area at the end of last week's trading session. You will agree with me that at this point in time that we are at a crucial juncture where, depending on how price participants in this market react to this level at the beginning of the week, will determine what our next line of action will be. Now, the question going into the new week is that, are we going to be seeing a situation where the bearish impulsive move that broke down the 1.2600 level in the month of September will see price retest the structure where continued selling pressure will push price to the downside in anticipation of a downtrend continuation? or are we likely going to be seeing price break out of the 1.26 area, where this level will now serve as a platform for new highs? Now, to be able to answer this question, I was able to find a simple setup on the 4 hours time frame, which we will be using to position ourselves for the next move. But before we go into the lower time frame, it's important that we keep tabs with the fundamental factors that are likely going to be driving the market sentiment for this week. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after these economic events. Now, on the economic calendar, based on the assets we are looking at, we will be focusing on high impactful events from both the United States and the United Kingdom economic dockets. Now, the first impactful event for the week will be coming in on Wednesday, November 29, and that is the gross domestic product annualized for quarter 3 from the United States economic dockets. On that same day, we're also going to be looking forward to the Bank of England's governor's speech, which of course will be giving us an insight into the monetary policy stance, economic outlook, and potential future policy actions within the United Kingdom economic docket. Then on Thursday, November 30th, we are looking forward to another high impactful event from the United States, and that is the core personal consumption expenditure. Then fast forward to Friday, December 1st, that's the first day of the new month. We look forward to the ISA Manufacturing PMI from the United States, and of course the Fed chairman Jeremy Powell will also be having a speech, and of course everyone will be looking forward to that speech. And of course you will agree with me that we have a handful of events to look out for, and as technical traders we do know that the anticipation of this event will be affecting the market sentiment and of course reflect on the chart as price action. So talking about price action, let's dive right into the 4 hours time frame, where I was able to spot a simple setup that will be guiding our decisions for this week. And what I did on the 4 hours time frame was to take into consideration the nature of price action in the last 3 to 4 weeks, and what I found here was quite interesting, as you will see that it's first of all, the market is very bullish, and in fact price action transition into what we usually call the ascending channel. And in fact, after connecting the series of higher lows, we have the support line of the ascending channel right here, and after connecting the series of higher highs, we have the resistant line of that ascending channel. Then we have a line that demarcates the upper half of the ascending channel from the lower half, which of course in recent time buyers have consistently respected it to push price to the upside. Now, with the situation we have here, it is quite clear that the market is bullish, and of course we do want to be looking out for opportunities to buy the assets. Then in addition to the ascending channel are the couple of levels I was able to identify here, and of course the most important one is the 1.26 area, which we identified on the higher time frame. Now if price remains above the 1.26 area, we shall be looking out for buying opportunities. And one interesting thing about this structure, which makes it very crucial, is the fact that price action is currently trading along the resistance line of that ascending channel we identified earlier. Now the question is, will the resistance line be broken to the upside where the 1.26 area will be a platform for new buying opportunities, or are we going to see price respect the resistance line one more time, bringing price below the 1.26 area where continued selling pressure will push price maybe into the 1.25 area to incite an uptrend continuation, or maybe break down the structure to test the support line of the ascending channel to incite an uptrend, or even go to as far as breaking down the structure to incite a downtrend scenario? Well, the answer will lie around the character of participant in the market around that key level at the 1.2600 level during the early part of next week's trading session. So trust me, I will be with you in the comment section on Monday morning after monitoring how participant will be reacting to the structure during the early hours of the new week to determine what our next line of action will be. If you have found this content helpful and useful in making your independent trading decision, I would really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so, and if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.